Okay, we are live. Good afternoon, ladies and gentlemen. My name is Ayomidotun Ayodele Bamishai, principal at Dexteritas. This afternoon, I'm here with a number of friends to share with you funding opportunities that exist for us in today's world. The last 16 months, 12 months and about have been challenging, to say the least, particularly bearing in mind that Calgary has yet to recover from the slump of oil prices back in 2014. So today we are going to talk about opportunities that are available for you to obtain the funding that you require to get your business going. Um, Proceeding, this event is brought to you by Dexteritas and Startup Court. Dexteritas is a full-service accounting firm providing bookkeeping, payroll, tax, and accounting services, as well as assurance services to our clients when they require them. Startup Court, on the other hand, is a full-fledged incubator where we support entrepreneurs who are looking to start, identify their minimum viable product, and build a business out of that. We are intensely focused on the growth and prosperity of enterprises in Alberta and in Canada. We support startups and businesses to achieve and exceed their set goals. That is who we are. So today, this is our agenda. I'll introduce my speakers briefly. Then we'll talk about the funding opportunities that are available to new businesses, then existing businesses, then COVID financing that has been made available by either the federal government or provincial governments, and then we'll take questions. The slides will be available to anybody who reaches out after the event, but I believe that this is just an opportunity for us to sit back and learn. So without wasting any more time, I'd like to introduce our presenters. First, Jasdeep Chahal. I hope I said that right. Forgive me if I didn't.
That was perfect. That was perfect.
Fantastic. He's a senior account manager with the Business Development Bank of Canada. And in his experience, he supported new and existing businesses with the required funding that they need to achieve their goals. He happens to be my account manager at BDC, or he used to be my account manager at BDC, actually. Yeah, that's true. I got that email recently. Fatima works at RBC. She's a business account manager working out of that's Country Hills and the Crowfoot branch. So she's out in the north doing work with small business accounts and commercial accounts. Her experience covers the whole spectrum from small business as well as startups. Rubina works with Scotiabank. Rubina Ijaz, she's a small business advisor, teetering on that year 10 mark. So she's been there, done that for a bit as far as retail banking and small business banking is concerned. So that's the lay of the land. And without taking any more time, let me welcome our first speaker, Fatima. She'll be talking about funding new businesses in Canada. Fatima, the floor is yours.
Thank you, Dalton. Good afternoon, everyone. I'm very excited to be part of this information session and a part of this journey with you. So for my piece today, I'm going to be discussing funding for new businesses. And so before I get into really the nitty-gritty of my piece, I really wanted to take a moment just to touch on new businesses. So what is a new business? How do we define this as lenders? So typically when we're looking at new businesses, we consider them to be startup businesses. And that would mean that that business has been in operations for less than 24 months. Now, this can also include a new owner who has purchased an existing business, but let's say they have had less than 24 months of experience within that industry or the business. So what we typically don't consider as a startup by definition is, let's say one owner or partner buys out another owner in that business, or let's say a business is setting up an additional company for a second location, or it's going to be a natural extension of their business. Another situation that we don't usually consider as startups is if it's a sole proprietorship or perhaps a partnership and they're looking to transition into an incorporation. So really understanding what that definition means is important. So for my basis of my piece today, I'm going to be focusing in on those businesses that have been in operations for less than 24 months. Or they've recently purchased a business and they have 24 months or less experience within the industry or business. So many people have been asking me, are lenders open for business? And the answer is yes. I'd say that all lenders always look to make sure that financing makes sense and that we're mitigating risk as best as we can, not only for ourselves, but also for business owners as well. So that being said, there's definitely high risk industries or sectors that are harder to lend to right now. One example of this would be fitness centers, for example. So we've seen this sector throughout the pandemic being impacted by, longer lockdowns than other industries. So taking into consideration the industry and the business, its viability is really important when seeking financing. I will just, before I go into the business plan, I'll just really quickly just say that historically, unfortunately, what we do see is that with new startup businesses, some do tend to close within the first 24 months. And that can present more risk than existing businesses because there's no historical performance that we can track. So, the most important piece, especially in this changing environment, is the preparation stage. So really making sure that we're developing a strong business plan for business owners. And that's what leads me to my first slide. So with the business plan, for new businesses, I cannot stress enough the importance of the business plan. Like I said, especially right now in the COVID environment where there's so much uncertainty, it's really important that you're developing a strong business plan as one of the first pieces, because this is really what most lenders and investors review. That being said, now I'm not going to go through each point on this slide, but I'm really going to just touch on some of the important pieces just to be respectful of time. So the business model, it's really the company's core strategy for ensuring that the business is operating profitably. So making sure right now your plan is adaptable, especially in this ever-changing environment, right? I'd also say taking time to explore e-commerce and AI. That's really a necessary component to consider. Many businesses have seen success with adapting a more digital model. And a lot of businesses have had to digitalize very quickly to continue to provide, their goods and services for their clients' ever-evolving needs. So there's just some food for thought there. The other piece that I just mentioned is a market research. So really understanding your target market and demographic to provide, better products or a better service experience, which will help you not only retain your clients, but also attract more clients in this market, right? As lenders, one of the most important pieces that we always look at in a business plan is your financial strategy. Like I said, it's oftentimes the most important piece. Now, every lender is different, but ideally, you should be looking to provide a lender with, 2 years projected month-over-month cash flow statement, your opening balance sheet, projected year-end financials, which would include your income statement and balance sheet. And this is something that Dalton could do for you. So, your accountant can help you in that preparation stage. So you have a great resource that you can leverage already to support you in developing your financial strategies. A piece that I did mention here is most lenders will not fund losses. So lenders don't oftentimes fund losses when so when you're preparing your financials, it's really important to ensure, your business is breaking even or showing year-over-year profit. Losses typically suggest weak business financials, which means a weak business performance. And it really becomes difficult to lend to a business that's that's not performing or that's showing losses within it, right? So that's something to really keep in mind when you're preparing your financials. The other piece that I would just mention real quick here, ensuring you have the cash flow to sustain your business operations. Usually, I recommend to clients to look at least 3 to 6 months cash flow availability. What we anticipate as lenders is that when you open your business, it's going to take you time to pick up clienteles. So keeping in mind that you may require working capital loans or operating lines that may support your business, or, taking a look to see if you have the personal resources to do a shareholder's loan per se, to inject into the business, right? So exploring those avenues as well. And then the last piece that I'll just mention on this slide is making sure that you have a COVID strategy in your business plan. It's something that, obviously before the pandemic, wasn't common practice, but I definitely recommend having a recovery plan or having a COVID strategy in place that will touch on the business's safety policies around COVID. If there's another lockdown, how your business will sustain itself, how will or has COVID impacted your business, your clients, employees, and your backup plans. So what else you can do to support your business during this unique time. So making sure that you're exploring those avenues as well. So Dalton, I'll ask if you can. Thank you. So things to consider. So once you do have a strong business plan in place, there are some other things to consider prior to deciding, what sort of financing your business needs. And I've listed that down, in this slide here. So deciding between whether, equity financing or debt financing, which route is better for you. Now, when we say equity financing, that typically involves selling a portion of your company's equity in return for capital. So investors would then own a portion of your company and they would have a say in all your business decisions going forward. But this strategy sometimes does benefit some businesses as, they typically don't have repayment obligations and, you get access to additional working capital. On the flip side, though, there is debt financing, and that's typically provided by banks, credit unions, and other financing companies, right? So this allows business owners to borrow money and pay it back with interest. So deciding whether you want to give a portion of control of your business to someone or you want to have that control within yourself is one of the key points to really consider when it comes to financing. Other things to just keep in mind is that, for any financing you seek, you really want to see that the business has the ability to service and retire its debt. So we look at the debt service coverage and the cash flow position to make sure that the company has the ability to repay its obligations, right? So that's really why making sure that you take time in your financial strategy and you you reach out to your partners, your accountant partners, to help you develop a strong financial strategy is so important. I'd also say that, when it comes to determining what financing is right for you, is also taking a look to see what your accounts receivable and your accounts payables are looking like. So what those payment terms are, and whether those align with your business's payment terms, to make sure, if there is any gaps there, that you're looking at bridging them. Also taking a look and making sure that you're aware of the type of guarantees that may be expected of you, depending on the financing you seek. So whether those are general security agreements, cash collaterals, liens on fixed assets. So identifying those pieces as well when it comes to the financing that you'd need. So with that, I'd ask that we flip to the next slide. Oh, and then I've just kind of touched on that, so we can go to the next slide after that. Thank you. So if you decided to go the debt financing route, startup businesses have access to so many different programs and financing types. Government guaranteed loans are most often the preference with startup companies, because they are government-backed loans, so they do provide a backing to your business, which mitigates a lot of times lender risk. And the big benefit for business clients is that the amount of upfront capital we would require, or you would require, to inject into the business is reduced, right? So that can really, benefit business owners to consider. There are, of course, the standard fixed asset financing options that we have in place. So equipment, leasehold improvements, which would be for renovations, real estate financing, and those are usually not 100% loan to value. So you would most likely be required to put some capital down to support those financing options for yourselves outside of government programs. Leasing, there is equipment leasing, so that is, of course, another route or option for startup businesses. When it comes to equipment leasing, it is common across all industries, and it can be for things like vehicles, factory machines, all sorts of equipment. And sometimes it can be a more affordable option to lease equipment versus financing it, right? So it's definitely a worthwhile area for a lot of startup businesses to explore. The other pieces, of course, are operating lines of credits and working capital. So we did touch on this previously, but I'll just really just mention it again. If you're looking to bridge your accounts receivable and your payables, and to ensure that you have maybe perhaps a more seamless business cycle, operating lines of credits may be a good option for your business, or looking at working capital loans that can support and sustain the business operations for at least 12 months or so, right? So ensuring that you're taking a look to make sure that you do have the cash flow to sustain your operations is also a part that shouldn't be forgotten. And then we do, of course, look at credit cards and overdraft protection for the business's day-to-day trade and transactions, right? So these are some of the financing options that you have available. So really taking the time to understand what it is that your business needs from a financing perspective, and then always touching with your business advisors to see what strategic plans can be put in place to help you and your business grow, right? So one of the last pieces that I'll just leave you with is also talking to your financial institutions about any partnerships or strategic partnerships that they have in place. One of the partnerships RBC has in place is with Futurepreneur. Futurepreneur Canada supports entrepreneurs, and they are a national nonprofit organization. So they provide financing, mentoring, and support tools for business owners, typically between the ages of 18 to 39. So they're also a great resource for startup businesses, but definitely worthwhile to talk to your business advisors and see what options are out there outside of the bank for mentoring and support for your business development. So with that, I'll hand it back to you, Dalton. Thank you so much.
Dalton, you're on mute.
Thank you, Jazz.
No worries.
And this is Fatima's contact information. She works out of the Country Hills branch and the Royal Oak Center, both in the northwest of Calgary. So right now, without taking any more time, we'll proceed to talking about funding options available to existing businesses, and Jazz will handle that. Jazz, the floor is yours.
Thanks, Dalton. Thanks, Fatima, for teaching us about startup lending. And I want to start off with, if you want to just change the slide, I don't think I only have one slide. Yes, Fatima said, hey, are we doing startup lending? Are we lending? Are banks lending? Absolutely. It's business as usual. There's a lot of capital flowing around, a lot of lending happening, a lot of transactions exchanging hands. But, you know, as Fatima mentioned, certain industries that were high risk prior to COVID are even more so high risk, right? Those industries, if you're trying to get into, will require a larger down payment. You will need a stronger, purse or bank account where you can cash flow losses going forward. If you do buy a restaurant, let's say, right? If you do come look for a transaction deal where you want to purchase a restaurant, so it is business as usual. But the risk appetite has changed quite a bit in the financial industry. Absolutely. But, let's get back to fundamentals. I think it's more important now than ever to start off with is the importance of financial reporting. There's a silver lining that I saw during COVID was business owners were forced to know how they were doing month over month at a certain point when they were requiring lending. And that was so to get loans from banks to qualify for CBI and all these other government programs to prove, hey, month over month, my sales did drop 50% compared to last year. So one silver lining I've seen during COVID is clients and business owners have realized the importance of financial reporting. And I can't stress this enough. Get a CPA accountant. More so now than ever, get a CPA accountant. Call Dalton, who has the expertise. Somebody you can call. There's a lot of accountants out there, but somebody you can pick up the phone and talk with on important business decisions that you can send, your monthly, quarterly reports to and review with them. That's more important now than ever. If you're a business that's doing a couple $1 million in sales and growing, pay the money for review engagements. It is worth its weight in gold if you get review engagements done. They're more audited to nose to readers, and you'll really know where your business is doing. And regardless of business size, what I've seen in the past is, I don't care if you're making $300,000 revenues or $3-4 million. A lot of people see their accountant at the end of the year with a shoebox full of receipts, and they go in, hey, do my taxes, thank you very much. That's not going to fly anymore. That's just not the environment we're in. Banks want to know how you're doing on a month-to-month basis, and they want to know that you know what you're doing. You could be growing but losing money. Where are you losing money? So more important now than ever, it's always been important, is getting your financial reporting in order. Get QuickBooks. If you're looking for a loan in June, banks are going to want to know how January to June looked compared to last year as well. So be able to, just know where you're at. That's more important now than ever. So get a CPA, download QuickBooks, learn QuickBooks, get your accountant, get somebody to teach you QuickBooks if that's not your forte. And my next point is keep an eye on your personal credit and personal net worth. We all know businesses and your family and personal life go hand in hand. They're very correlated. They're both 24/7. They're very correlated. That's all that's on your mind. And one thing during the pandemic, I know Canadians are saving more compared to pre-COVID levels. But for the last 5 years, we've also been talking about the debt load Canadians have been taking on. And I know on the personal side, a lot of business owners use personal resources for their business, and they might miss payments here and there. But regardless of whether it's secured assets, banks are secured by a building or equipment, or if it's unsecured, your personal guarantee is going to be required to some degree. It might not be 100% for secured assets, but it's going to be required. And it will have an impact if you can get a loan, number one, if you qualify, and number two, the interest rates that banks are able to give you, especially on commercial lending. Every point counts, and it adds up to big bucks. So that's a very important point I want everybody to just keep in mind, regardless of how big or small your business is. Just remember, business and your personal life go hand in hand, and you will always be required to give a personal guarantee. And my next point, the third one, is just balance sheet strength. Our balance sheets, every balance sheet, not every balance sheet, but they've been stretched, right? People are paying you slower. Your payables are still due. And, give discounts on your receivables. Use that to pay your payables. Cash is king, so wherever you can save cash, absolutely do. And I know Fatima touched on it, difference between debt and equity. There's a lot of leverage on the books now. There's a lot of programs, a lot of cash on hand in way of debt. So if you're highly leveraged, banks are going to be very reluctant to look at your balance sheet. And if, every industry is different, but if you're 10 times debt to equity, banks are you're very highly leveraged. And that means if you're looking for a loan in 6 to 12 months, don't take out dividends. Don't suck out all your profits in your business, because that takes the equity away. Retained earnings and shareholder loans are what make equity on the books. Don't pay back shareholder loans if you're looking for loans. I've seen businesses that make a couple $100,000 in profits every year, and they suck it out as dividends every single year. I had a client pre-COVID take out $450,000 in dividends. I know his salary is $100,000, so $350,000 is discretionary. That's fun money that I'm taking out of my business. I'm taking the profits out. They're not on the balance sheet as equity anymore. And then COVID hit. So don't be surprised if your banker or your bank asks you to put money back in order for you to get a loan. So it's very important if you are looking for debt to not be highly leveraged, keep money in the business. Because I've seen it. I've seen banks say, you took out $400,000 or $300,000 last year, put that back before we lend you financing because you're too leveraged. So be prepared for that. I'll go into the next little section of mine, just to know, just quickly touch on what type of financing I'm doing here at the bank. Like I said, banks are open for business, and it's very industry specific. Have I financed a restaurant? Absolutely. Did the individual have ample experience in the industry? They have industry experience, and they have cash to throw into the business after the transaction's gone through to keep the business afloat on a month-to-month basis. That's very important. As Fatima said, a lot of businesses go sideways in the first 24 months. And that might be a little bit forgiving. It might be the first 12 months, right? The first 12 months are very high risk. So we do look at things like that. First loans, the COVID-19 working capital relief that BDC had, that was for, we still have it going on. Very, very busy with those loans. It was to assist clients for 6 to 12 months of their fixed capital costs, companies who have been struggling with due to COVID-19, and companies that were successful prior to COVID-19. If you were successful prior to COVID-19, chances are you're going to be successful after. You know how to run your business. You have the market, right? But if you weren't successful before COVID-19, chances are it's going to be very tough. Go for you, and really tough for lending purposes at a bank. One thing we're going to be talking about next is when you do go look for relief at a bank, it's what other programs have you turned to? Did you get wage subsidy? Did you get SEBA? Banks don't want to be the only bank in town assisting you. They want to know that you've taken advantage of all other opportunities that are out there for your business, and we are part of the entire assistant package. That's how banks typically want to see things. The next two I've seen is growth working capital and transition financing. We've been talking about baby boomers for the last 15, 20 years. Oh, they're going to retire. There's going to be this, we've been talking about it every year. And that time is coming. And, in the next 2-3 years, a lot of individuals are going to be retiring. And I feel with the downturn over this last 6 years for oil and gas, we've been seeing a higher increase in transition deals where people want to purchase a business that's already operating. And COVID's really sped that up, I feel. People who are looking to retire in 2-3 years are saying, you know what, let's retire now. Let's sell this business. We've been thinking about it for the last 6-7 years. So it's really sped that up. With transition financing, again, industry specific, but open for business. I financed a Subway two months ago. Transition financing. Individual wanted to purchase Subway. They've owned a restaurant in the past. I'm looking at a car wash that just got authorized this week. Untouched by COVID, it's a car wash. Yeah, people are driving less, but people are also driving more. They are trying to get out of the city and go hiking and do things. They might not be driving to work, to the office, but I've been seeing a lot of transition financing deals happen over the last 12 months. A lot of businesses out there for sale, and it's going to happen for the next 5 years. I think there's going to be a big increase with the amount of individuals retiring. BDC consulting loans. We offer consulting loans for small and medium-sized businesses, and I've seen an increase in our BDC consulting because of COVID. How do we counter, decreasing sales? So there's loans available to help clients with, let's say, sales and marketing has been very popular, where an expert comes in for 3 months and learns about your business and teaches you about sales and marketing for your business. That is a huge mitigant of how do we deal with decreasing sales, our retail store closing, et cetera, et cetera. You mitigate that with investing in sales and marketing, increasing the top end, right? And another one's been strategic planning. Having an MBA engineer type consultant come in and very diligently, internally and externally, see how you are coping in your current environment. Whether it be COVID or pre-COVID, where are you in this current environment? What are your obstacles? From biggest obstacle to lowest. Let's write it down. Let's think about it. How do we get past that obstacle? Let's come up with an action plan. Let's come up with a roadmap. Business plans are needed when you're a startup, but when you're an existing business, strategic plans are needed in writing a roadmap of where you're going to go in 2 to 5 years, how you're going to get there, how to overcome obstacles. So I've been seeing a lot of that, and it's been really refreshing seeing entrepreneurs really opening up to the idea of not even opening up, but knowing that they can't wear all hats. You can't be an HR manager, an accountant, a sales and marketing expert. You can't be that all in one business. And the COVID-19 has really brought that to light in certain in entrepreneurs saying, hey, I do need help. I don't know about this. So that's been really refreshing. And I know we see a really hot housing market there right now in the last 3 months on the residential side. Commercial's a lot different, right? In terms of marketability, supply and demand. But I've done double the amount of commercial loans, commercial mortgages in 2020 compared to 2019. And, just figuring out why. I know interest rates are low, but they haven't always been low for the last, 16 months. There's a lot of supply. My biggest factor I see is people want to be their own landlords more so now than ever, where they're dealing with landlords, they're dealing with rent and their business being closed, not being able to operate due to government restrictions, but having to deal with a landlord. So I feel like that's the biggest component. That's standing outside of any reason you'd want to purchase a property, build equity. Is cheaper than leasing, et cetera, et cetera. But I've been seeing a lot of commercial real estate deals out there. More so, like I said, double the amount I was seeing in 2019. But overall, I just want to say, get a CPA accountant, call Dalton, get QuickBooks, know where you're at on a monthly, weekly basis. Keep care of your personal credit. I know it's tough. It's a tough time out there, but just always know that banks are, regardless of how great your business is doing, you're always going to be providing a personal guarantee. So, hone in on that, focus on that. And overall, like Fatima said, banks are open for business. Reach out to your banker and talk strategy. So with that, I'll pass out to Dalton, and thank you for the opportunity.
Thank you very much, Jazz. So this is Jazz's profile. He's a senior account manager with BDC, 7 years plus doing this, from consulting to commercial mortgages, unsecured working capital injections. Those are all things that he does at BDC. And this is his contact information. When you get the slides at the end of the event, then definitely you can reach out to him should you need to. And then without taking any more time, I would like to welcome Rubina Ijaz, who will be talking about COVID support lending that's available to new and existing business owners. Rubina, the floor is yours.
Thank you, Dalton. Hi, everybody. Thank you for being here with us today. I actually just wanted to talk to you about a few different things here. Today, we'll just take a look at what kind of financing is available for COVID-19 programs and what you can take advantage of. If I can ask you to just go on to the next slide here for me, Dalton. So there's a few different programs available right now. There's a Canada Emergency Business Account. There is options available for your business on wage and rent subsidy. Highly affected sector, HASCAP loan. There is BDC co-lending programs. There's always grant launch programs as well as bank loans. So just to give you a little bit details on each of those programs that are available. So Canada Emergency Business Account, or CEBA, it is up to $60,000 of a loan through the government. It is programmed and given to you through the banks. Initially, it was $40,000, recently increased up to $60,000. 0% interest rate as long as you repay by December 31st, 2022. However, if it is not repaid at that time, it does turn into a fixed loan, which is still administered through the bank, but it is a funds that you're going to owe to the government. In a 3-year term, 5% interest rate is how it ends up being. These loans will always have to be repaid. Repayment on this loan is, if you've taken the $40,000, then you have to repay $30,000. If you've taken the $60,000, repayment is $40,000. That $20,000 is a forgivable portion. However, do check in with your accountants with the information on this, because that $20,000 will have to be part of your revenues of the business when you do your financials at the end of the year. This loan is given to either sole proprietorship or in corporations, regardless of the structure of your business. It is a quick application. There's 2 options available for it. Option number 1 would be to do it through payroll expense, or option number 2 would be to do it through business expenses if you don't qualify for the payroll portion. So it is a conversation to have with your business advisor as well as your accountant, as there are different avenues to take to get those financing available. Another option available for you, so on the next slide, is actually a Canada Emergent, so the other wage and rent subsidy options. I do recommend talking to your accountant about this as well. Like I said, because these programs are all administered through the bank, but financed through the government, there are different avenues that can be taken. With rent and wage subsidy, your business has to have 30% decrease year over year or month over month to be able to be eligible for it. There are also 2 different programs available in order to apply and to approve. Program 1 would be a holistic approach of having invoices available to show the decrease on revenues. Second option available is funds available in your bank account when it comes to income. So it does get a little bit complicated. So I recommend talking to your accountant and making sure that you are applying for everything that is available. Also go to the government's website for eligibility requirements. Each application is done separately. So you do have to apply for wage subsidy separately than rent subsidy. And each application does have due dates available as well. So if you're applying for October, then you've got 180 days from then to be able to put in the application. So there is deadlines that you want to make sure that you are complying to. And there is no repayment on these, as it is assistance for COVID for your business. However, if you are looking for other factors, there is highly affected sector loan availability, shortly known as HASCAP. It is a loan administered through the bank. However, it is a partnership through BDC. Although BDC may be doing a guarantee on that loan, it is still through your bank, and you want to go to your bank to have this discussion. It is available for any type of business, incorporated or sole proprietorship. It is, however, a loan. So you are looking at up to a 10-year amortization at a fixed interest rate of 4%. The interest rate may vary depending on your bank, as these programs are a little bit different through each bank. The end date on these programs is June 30th, 2021. However, that is just the date that you have to apply by. You have 90 days from that day for getting the financing. So if you are approved by June, but you don't need the money till July, you can still do that, as you have 90 days from the day of your approval to get that financing. The financing is done in a fixed loan section, and the full amount is withdrawn immediately and given to you in your bank account for your expenses for the business during this time. The approval can be anywhere between $25,000 to $1 million, depending on how much money your business can afford and how much it is that you need to continue going for your business. Another option available for you is also a BDC co-lending program. Again, it is a program that is administered through the bank, although BDC may be doing a guarantee on it. So make sure that you're staying in contact with your bank and your advisor, and you're staying on top of your finances. Many of these loans have to be done from the bank account, from the bank that you have your bank account at. So ensure that you're going back to the same bank and ensuring that you have the same advisor who's able to guide you through all of these loans. With BDC co-lending program, this was a program that came out prior to HASCAP, although both programs are still available. A co-lending program is available for working capital eligibility, up $312,500 or 31.25% of your revenue is what is the determining factor on how much you will get qualified for. Again, this loan is amortized over 10 years, broken down into 2 terms of 5 years and 5 years. You may potentially have interest-only payments available for this loan, just like any other loan, for up to 12 months. After that, you would be making your principal and interest payments until the loan is cleared. Although not everything is about loans, one of the things I would recommend also is looking at what is available to you for government launch grants. Take a look, do your research. I do know Alberta government has grants available. That is one thing I always tell clients, that before you take a loan through the bank, always see what is available for you out. Take a look at all the grants that are available, whether it is CFIP that's able to help you, whether it's over Alberta government or Government of Canada. Right now, Alberta government had the $10,000 grant available, which has ended as of March 31st. However, a new grant is being launched as of next week, which is also going to be additional $10,000. I do recommend grants only because it is not a debt to your business, and it's not something you have to worry about repaying. So it is always good to take a look at. Check with your accountant, do your research, make sure you're looking at it. or come by the branch and speak to your advisor, just to make sure that if they have the information, they are able to guide you through that programs that are available for you. Also, although it may be COVID times, like we have all mentioned, banks are business as usual. So one thing that you can always look at is expanding and growing your business and looking at having regular loans that are available to you and your business rather than having to take on the debt load for the COVID programs, which would have a deadline on repayments. Bank will always finance things like lines of credit, credit cards, letter of credit, etc. Those financing can be done in different ways, whether it's revolving, a fixed loan, or a fixed guarantee. As well as having a repayment can be flexible on those more than what the COVID program have available. Scotiabank right now has dedicated options that we can always talk to you about as well, such as Scotia Professional Plan, which then is a dedicated program for lawyers, doctors, etc., who are an actual designated professional. One thing that we all take pride in at Scotiabank is women-led businesses, the program called Scotia Women Initiative. Scotia Women Initiative has different factors available to it, whether it's access to capital, mentorship program, or education programs, or just getting you in contact with other women who may be in the same boat as you or struggling. The reason this program has come to light is we wanted to make sure that we are breaking the glass ceiling and making sure it is fair and equitable for everybody, and making sure that women are getting into the business field, becoming their own bosses, and getting the capital financing that they need to grow the business. There are always different types of programs available, regardless of what kind of field you may be in. Whether it's restaurants, the programs available for restaurants, IT sectors, as well as any other. So, like I said, research, or just come have a seat, talk to your advisor or your accountant and see what is available out there for you. So with that, I will give it back to you, Dalton.
Thank you very much, Rubina. It's been an interesting few minutes. So, to my mind, it sounds like there's just a lot of money out there that is available to be taken. And with this kind of information, it just means that people can reach out to you. So, to our viewers, if you have any questions, you can just put them in the comments box on any of the platforms that you are watching on. We'll be able to respond to you immediately. But pending while that comes in, to be able to secure this funding, Jazz, you did mention a bit about personal credit, right? Now, how much of a role does that play in my ability to secure funding for my new business?
For a brand new business?
Yes.
If you're starting a brand new business, it is very important. More important than any other aspect you can think about. Your personal credit, personal net worth will speak volumes when it comes to your ability to cash flow this business. When you're starting a business, it's typically unsecured. We partner with other banks. There's a Canadian Small Business Financial Loan that's available through Scotia and RBC, right, that we partner up with. That's for commercial buildings, equipment, and leaseholds. Those are three, areas that fall in. But when you're looking at unsecured debt, you typically need you need startup capital. Personal credit is important because when it's unsecured, banks are saying, hey, look, you've spent your whole life keeping a great credit score, paying all your bills on time. You've been on top of it. We expect that pattern to continue into your business, right? We have a personal guarantee securing this. So personal credit plays a huge role in startup lending, and it plays a huge role in secured lending. After you want to purchase a building, yeah, we're going to, it's under your business, but there's a personal guarantee aspect of it, right? We'll take a 25% guarantee from the shareholders on this building. Up to 100%, right? Banks go unlimited guarantees on the personal side. So it's very important, and people just need to realize that you aren't two separate entities. You might have a corporation, but you are the company, right? You are the shareholder, you are the director. So we look at that.
Okay, so you just mentioned something now that has piqued my interest. You said you are not two entities. As far as I'm concerned,
Legally, you are legally.
legally two separate entities, right? So how does that marry with what you just said?
100% legally, you are two entities. I meant, business and your personal, your personal position go hand in hand. Banks look at the full picture. That's what I meant by them saying, it's the same. Banks will look at the full picture. You have a bunch of bankruptcies, if you have a bankruptcy or a couple bankruptcies, or if you just haven't been paying your bills, and you want not startup lending, if you're an existing company and you want lending, we're going to look at the full picture.
What Jazz is trying to say is that this is a marriage. So you may be two different individuals. However, when it comes to it, we look at it together. So
Absolutely.
you may be completely two different individuals as a person and as a business. However, when we look at it as a whole.
Very well said. Very well said.
Okay, so that sounds to me that like you're saying that the business is expected to have my characteristics.
Basically, yeah.
Okay. So however well the business may be throwing off cash and doing very well, if I have a bunch of bankruptcies and I'm bad at paying my bills, everybody's gonna they may not take a rain check because the cash is there, but they'll be like, okay, you may not use the cash the way we expect to use it because hey, you haven't done that in the past.
Mm-hmm.
Yeah. So banks look at 5 C's, and one of the C is a character when it comes to doing any type of lending. So, but you have the capital, yes, but do you have the character to show that you are able to finance this and carry this loan? So if your history is showing that you are weak in repayment on other loans, is the bank going to take a risk on getting you that financing? So one thing we all take pride in and be able to do with you is sit down and educate. So, having a bad credit history is not uncommon. However, let's have a sit down, let's have a chat, let's educate and learn how to get past it and how to grow so you can grow your business as well.
Go ahead, Fatima.
You're on mute, Fatima.
And then I dropped my phone. I was just going to say that I just wanted to add to that point a little bit that, as lenders, we're always looking at mitigating the risk, right? So we're looking at the perspective of a worst case scenario. And when we're talking about, let's say delinquencies or past due issues on your credit bureau, it's not necessarily a deterrent, but what we need to see is how are we going to mitigate that risk in future or on the business side so that we can provide you that lending that you seek, right? So I wouldn't say that definitely I agree the personal lending, your personal credit bureau, your history, character, as Rubina mentioned, they're all very key, but we also look at how do we mitigate that risk? If you're late on payments, what can we do? Is that setting up payment arrangements with you? How do we mitigate that risk so we can help your business grow and expand, right? So I think that that's just a small little piece I wanted to just add in there.
Fantastic. Thank you very much, Fatima, for throwing that in. Now, I'm going to ask another question and basically just say for existing businesses, transitions, what are the kind of things that people who are looking to take over those, what should they be looking for, basically, that will help them to basically prepare them to properly answer your questions? So somebody finds, let's see, a Subway. The owner's run it for the last 10 years. He's in his 60s and he's ready to move over to Hawaii because he's found a dream home and he wants to cash in his chips. What should I be looking at as a prospective buyer prior to coming to you to say, hey, I need you to give me $2 million to go buy that subway downtown?
I think we could all touch on this. I'll start. Loan to value, I'm going to say have 25% down at the purchase price. Whatever the purchase price is, have 25% down. Anti-money laundering laws, we want to know where that money came from. That 25%, where did it come from? We want the financials for the target company, for the subway. Can it support 75% debt? Can it? So, we want to get financial statements from the existing business. And again, personal credit, personal net worth. Okay, you're going to put 25% down. Is that all your chips? Are you taking all your chips from every account and here's 25%? I got it. It's like, okay, well, what else do you have? Do you have a line of credit? Do you have equity? Do you have marketable securities? Do you have investments? Somewhere you could pull money from, because you're going to need it. Once you take over, you're going to need cash to put into the business to keep it afloat on down months. So it's not just the 25, it's after the 25, what do you have? And what's your experience? What is your experience? Why do you want to purchase this? We're going through COVID. Why do you want to purchase this? Is the price reasonable? What is, do you have experience? You had to Subway 5 months ago or 5 years ago. So experience and reason why you want to purchase it are.
Fatima, you go ahead.
Thank you. I was going to also just say that the business valuation, I think that that's a huge piece when we're talking about looking to purchase an existing business, is making sure a lot of times business owners, they don't take that time to get a business valuation done. So an appraisal of that business. So really making sure that you are talking to the right people, that you do get the business properly appraised, so you really know that what you're getting into, right? Are there red flags that the business has? Has the business been on a year-over-year decline, or seeing losses, right? So making sure that you've identified that. Is the business really worth what you're planning to put down, right? So because a lot of times when you're looking at purchasing a business, it may be 2, 3, 4 times the revenue, and is that justifiable, right? Especially in today's economy, and what we're seeing with COVID, right? So making sure that you're really doing the proper research, you understand what's involved in that purchase of that existing business. I think that's another piece to explore and consider.
And I think one of the things for me is, the biggest thing is your resume. Why are you interested in buying this? What do you bring into it? What is your experiences? How do you plan to grow it if that's what you're looking at? Or is this business just good for you and you're just going to keep it stable and you're not looking at any type of growth? You're just looking at consistency. So those are all the factors to pay attention to as well. Because if you're looking at growth, you want to look at their financial statements as it's an existing business, and making sure that we are taking a look at how you're going to get to that next step, whatever that next step may be, whether it's getting a second franchise or you turning in your restaurant into a franchise eventually.
Okay. So for me, this has been a very informative session for me, bearing in mind the amount of knowledge that you guys have shared. And I want to say thank you to every one of you. Thank you, Rubina. Thank you, Jazz. Thank you, Fatima, for preparing for this, because those slides did not magically appear, to showing up and being here and just sharing your knowledge for the last hour. Thank you very much. I really appreciate this. And
thank you.
Yeah, thanks, man.
From all of us at Dexteritas and from the team at Startup Court, we want to say thank you for choosing to spend the last hour with us, having this conversation about funding and financing. An email is going to go out to all the people on our mailing list with links to the video. So if you want to watch it again, you can. And then, of course, you can request the slides. So in the slides, you'll find the contact information for all of our panelists. You can reach out to them if there's anything specific that they've said, which you need clarification on, for which you've not been able to get that on this webinar. So once again, thank you, panelists. Thank you, viewers, and enjoy the rest of your day. Bye.
Thank you, Dustin.
Thank you.
Appreciate it.